Hey everyone, it's Rob, and welcome to a 7-day challenge that could seriously upgrade your trading game. We're talking about building a solid foundation, whether you're just dipping your toes into the market, or you've been trading for a while and want to refine your edge. Over the next 7 days, we're covering a new crucial aspect of smart trading, each day building on the last. So buckle up, smash that like button, let's get this bread. Alright, day 1, and we're starting with the foundation of any successful trader: mindset. Look, I get it. You see those screenshots on Wall Street bets, people turning a few $1,000s into life-changing money, and you think, that could be me. And hey, maybe it could, but the real secret those posts don't show you is the behind-the-scenes work. See, the best traders, the ones who are consistently profitable, they don't treat this like a casino. They're not chasing the next meme stock pump. They're in it for the long game, building wealth over time, and that starts with the right mindset. First off, define your why. Why are you even in the market? Are you trying to build a retirement nest egg? Do you want to trade full-time and quit your job? Write that down. This is your driving force. Next, set realistic goals. Don't aim for 100% returns in a month. That's a recipe for disaster. Think about it. Even a 10% return every month is phenomenal. Be honest about how much time you can commit and how much you're actually willing to risk. Finally, and this is crucial, adopt the mindset of a student. The market is constantly changing, so you need to be constantly learning. Read books, take courses, study charts. The more you learn, the better equipped you'll be to navigate the ups and downs. Action tip: here's your task for today. Write down your why and one daily habit you can commit to that will make you a better trader. Day 2, and now that we've got our head in the right place, let's talk about the actual market. Because before you even think about placing a trade, you need to understand what you're actually trading. We're talking stocks, ETFs, options, futures. These are the instruments of the market, and each one has its own personality, its own risks and rewards. Don't just blindly follow what you see online. Take the time to learn the basics. Stocks, they represent ownership in a company. ETFs are like baskets of stocks tracking a specific sector or index. Options give you the right, but not the obligation, to buy or sell an asset at a certain price. Futures are contracts to buy or sell an asset at a future date. Then you've got indices like the S&P 500, the NASDAQ, the Dow Jones. These are like benchmarks that track the performance of a group of stocks, giving you a sense of the overall market sentiment. Pay attention to things like liquidity, market cap, volume. These are all factors that can affect how a stock trades and how risky it might be. Action tip: for today, pick 5 stocks you're interested in and start following them. Use a platform like TradingView or Yahoo Finance to track their price movements. Look at their charts. Get familiar with how they behave. Day 3, and it's time to talk strategy. Because knowing the market is one thing, but knowing how to actually analyze it and make informed trading decisions, that's where the real money is made. There are 2 main schools of thought here: fundamental analysis and technical analysis. Fundamental analysis is all about looking under the hood of a company, diving deep into their financials, earnings, revenue, debt, all that good stuff. You're basically trying to determine the intrinsic value of a company, whether it's overvalued or undervalued by the market. Technical analysis, on the other hand, is all about reading the charts. You're looking for patterns, trends, momentum indicators, trying to predict future price movements based on past data. The beautiful thing is, you don't have to choose just one. Many traders use a combination of both approaches to make more informed decisions. Action tip: for today's challenge, I want you to pick one fundamental metric, like PE ratio, and one chart pattern, like a head and shoulders pattern, to focus on this week. Learn everything you can about them. Chapter 4, Risk Management, Protecting Your Capital. It's day 4, and let's talk about the not-so-sexy but absolutely crucial part of trading risk management. Here's the hard truth: even the best traders in the world don't win every single trade. In fact, many of them might only win slightly more than half the time. The key to their success? They've mastered the art of losing small and winning big. Here's the golden rule: never ever risk more than 1 to 2% of your total trading capital on any single trade. That's it, no exceptions. Because even a string of small losses can quickly snowball into a devastating blow to your account if you're not careful. Use stop-loss orders. These are your best friend. They automatically sell your position if the price drops to a certain level, limiting your potential losses. Trailing stops are even better because they move up as the price of your stock goes up, locking in profits along the way. Understand the risk-to-reward ratio. This is simply the potential profit you stand to gain versus the potential loss you're willing to risk on a trade. Aim for at least a 1-to-2 ratio, meaning for every dollar you're risking, you're aiming to make 2. Action. Tip: set up a mock trade on a platform like TradingView and practice placing a stop-loss order. Calculate your risk-to-reward ratio for the trade. Get comfortable with these concepts before you put real money on the line. Chapter 5. Building a watch list and routine. Consistency is key. Day 5, you're halfway there. Today we're talking about structure. Because trading isn't just about randomly buying and selling stocks, it's about having a plan and sticking to it. First up, build your watch list. These are the 5 to 10 stocks that you're most interested in, the ones that fit your trading strategy and risk tolerance. Don't try to follow everything in the market. It's overwhelming and ineffective. Next, establish a pre-market routine. Wake up before the market opens, grab your coffee and scan for potential entry setups on your watch list. Look for patterns, check the news, see what's moving. And finally, start journaling your trades. This is huge. Record why you entered a trade, what your plan was, what actually happened, and what you learned from it. This is how you identify your strengths and weaknesses as a trader and improve over time. Action tip: set up a daily pre-market routine for yourself. Maybe it's 30 minutes of chart analysis, reading market news, whatever works for you. Make it a habit. Chapter 6. Never stop learning. The market is always changing. Day 6, and we're diving into a topic that's crucial for long-term success in the market: continuous learning. Because the stock market is like a living, breathing thing, it's constantly evolving with new trends emerging all the time. What worked yesterday might not work tomorrow, so you've got to stay ahead of the curve. Think of it like any other skill you want to master. A professional athlete doesn't just stop training after they make it to the big leagues, right? They're constantly working on their game, studying their opponents, adapting to new techniques. Trading is no different. Luckily, there are tons of resources available to help you stay sharp. There are amazing books out there, both classics and new releases, that offer valuable insights into market psychology, technical analysis, risk management, and more. Online courses are another great option. You can find courses on literally any aspect of trading you can imagine, from beginner basics to advanced option strategies. And the best part? You can learn at your own pace, on your own schedule. Finally, don't underestimate the power of community. Join online forums, attend webinars, connect with other traders, share ideas, discuss strategies, and learn from each other's experiences. Action tip: commit to learning something new about trading every single day. Read a chapter in a trading book, watch a YouTube tutorial, listen to a podcast during your commute. Knowledge is power, especially in the stock market. Chapter 7. Review and reflect. The power of looking back. Day 7, and we've reached the final day of our 7-day challenge. Congratulations for sticking with it. Today, we're focusing on a crucial element of successful trading that often gets overlooked: reviewing and reflecting on your trades. See, it's not enough to just place trades and move on. You've got to take the time to analyze your wins and losses, understand what worked and what didn't, and identify patterns in your trading behavior. Think of it like watching game film after a big match. You're looking for areas where you excelled, areas where you can improve, and any missed opportunities. It's about learning from your experiences, both good and bad, so you can make better decisions in the future. Set aside dedicated time each week specifically for trade review. Go through your trading journal, revisit your charts, and analyze your entries and exits. Did you follow your trading plan? Did you manage your risk effectively? Were there any emotional triggers that influenced your decisions? Remember, every trade, whether it's a winner or a loser, is a learning opportunity. The more you embrace this mindset of continuous improvement, the better equipped you'll be to navigate the markets with confidence and consistency. Action tips: schedule a specific time in your calendar for weekly trade review. Treat it like an important meeting that you can't miss. Your future self will thank you. So there you have it, 7 days, 7 key principles to trading smarter. Listen, I'm not going to sit here and tell you this is some get-rich-quick scheme. This takes work, it takes discipline. But the rewards, both financially and in terms of the skills you develop, they're more than worth it. Remember those 5 stocks you started following? Go look at them. See how much you've already learned just from paying attention. That's the power of consistency and a commitment to learning. This is a marathon, not a sprint. Stick with it, keep learning, and I'll see you in the markets.